Thank you, Ray, for your confirmation. So, in the previous live stream, I talked about this gold trade right here, and this right here was our entry position in the marketplace, and right here was our stop loss. And as you can see, how this there was this spike. I don't know if there was any news today, so there wasn't really any news, but the spike all of a sudden took the stop loss, and then we're seeing a reversal afterwards. So it just happens in the marketplace. Sometimes you place your stop loss at significant key levels and then price still takes those stop losses. So right here we saw the first run on liquidity and then drop breaking structure, showing us that the next thing we want to see is a retest and continuation. For some reason, price still took the stop loss and now trade is running down in our direction. So it's all part of trading. This is the reason why it's always essential to use stop losses, stop loss orders, and also never risk too much per trade. Like I said, any trade idea I post this week, like I said, you can see it's high risk. And the reason I put it high risk is because of what just happened right now in the marketplace. Things like this are bound to happen in weeks like this because, as you can see, we'll have CPI coming out tomorrow. So, most likely, the trading is going to be a little bit lesser instead of us just taking unnecessary losses like this because this trade, everything aligned for it to go to the downside, but the manipulation is just out of this world and they ran the liquidity and now price is going towards our direction. So, but that is all we see in trading. So whatever trade you're entering this week, make sure you're using very, very small risk of your account because in weeks where we have CPI news, it's very, very delicate and anything can happen. It's very volatile and price can easily run your stop loss and still go towards your direction. That is the reason why every single trade idea that is going to be posted this week is going to be a high risk trade. So trade wisely, use good risk management parameters for every single trade you get into. So we're going to jump into the chart and look at AUD USD as well. So for AUD USD as well, we were looking forward to see if this key level was going to sustain for us to continue higher. But as you can see, price still wanted to dive a little bit deeper into this inefficiency. And so far, you can see we tapped the inefficiency. And we're not going to jump into any trade yet on GBP AUD. First thing we're going to be waiting for is to see a shift to market structure on the 15 minutes time frame, and once we confirm a 15-minute shift in market structure, then we'll potentially look for entry positions into the marketplace. So for now, we're just going to sit on the sidelines and wait and see what the market is going to present to us. So right now, this is our 15 minutes high, and then this is the 15 minutes low. So there isn't really much to do right here. We're still ranging within this range high and this range low. And all we're going to do now is to be patient and wait to see the market show us what it wants to do eventually. If it's gonna be to run this high, then we'll wait for a retest. But if it doesn't run this high and creates another low, then that means the new low is gonna be the low we're working with, and then the new high created within this range will be the area to work with. So we're just gonna be on the sidelines for AUD, GBP, AUD for now, and see what the market is gonna do. So we're gonna look at another one is a trade we got into on Euro US dollar. So the trade we got into on Euro US dollar is basically still at our entry position. So it's still ranging within our entry position, but it's just a 1:1 risk to reward ratio. And I'm anticipating to see expansion to run into this inefficiency. So you can basically see how gold spiked to the upside, but Euro US dollar is just stagnant. And then you can see how GBP US dollar just keeps trending to the downside, right? So these things just show you that in a situation where the CPI news is gonna be coming up tomorrow, the the price action just seems irregular. It doesn't move in the most profitable way. So the best thing to do is it's either you're on the sidelines or you're just using minimal risk, as minimal as possible, because anything can happen and price can just wipe you out and still go towards your direction. And there's basically nothing you can do about it. You're just gonna have to take the loss and move on. So that is all I'm looking forward to see on British pound US dollar as well. Right here, I'm still anticipating for it to come to the upside right here into this key level. We'll have the 1 hour inefficiency resting right here. I'm still waiting for that as well. And for Euro US dollar, as you can see, Euro US dollar seem to be going to the downside now, a little bit into our entry zone. So we're just gonna have to wait this out and see what it's gonna do. If it takes our stop loss, is now right here. We've thrown the stop loss from here to right here. So this is where our stop loss is right now. So right here is our stop loss. So even if we take a loss, it's gonna be probably it's gonna be way less than half the risk. So if we're risking 0.5% and it takes a stop loss, it's gonna be probably around 0.2% loss on this one. But it's all trading. Just trade wisely, use very low risk for any trade for this week because we have really significant high impact news this week. I expected to see an expansion to rally into this key level, but as you can see, price is still dropping to the downside. So we're just gonna wait it out and see what price is gonna do eventually. And if you do have any questions or you have any pair you want me to look at, feel free to drop it in the chat, and I'm gonna be there to look at that pair. So the next thing we're gonna do, we're gonna look at what the Nasdaq is doing as well so far. So for the Nasdaq, it's still printing new all-time highs, and we're currently at new all-time highs right now. There isn't really much to do with NAS right now. We're at all-time highs. You're not going to buy at an all-time high, and you're also not going to try to sell it from an all-time high because you don't know how high price wants to go. Maybe price wants to keep going higher to 20,000. Nobody knows that. So the best thing to do is just to sit on the sidelines and wait for price to do its thing. So far, if you wanted to get into the market, you could have seen the inefficiency here would have been a key level to get into the market. Another inefficiency here, price came into it. Another inefficiency here was another key level to get into the market. And then look right here, another inefficiency, continue high. So basically, the best option would have been to be looking for buys to continue higher. Just keep looking for buys to continue higher and buys to continue higher. So that is basically all to look out for on Nasdaq. There isn't really much else to see on Nasdaq besides it going to the upside. So we'll look at the S&P 500 as well. So for S&P 500, still at all-time highs. So there isn't really much else to see on the S&P 500. Price has broken the previous high and we're at the all-time highs. So that is all I see on the S&P and the Nasdaq. There isn't really any trade to get into on them. So we'll look at Bitcoin to see what Bitcoin is doing. So right here, you can see this buy side liquidity. I talked about it over like a month ago. That was in January. And after price took this buy side liquidity, I annotated the low, the inefficiency, and also the low hanging fruit being this low. And I said I wouldn't be surprised to see price to run this liquidity. And as you can see, we took liquidity. And then last few weeks, we were around here. And I said this right here is going to be my next drawn liquidity. And if price draws into it and it doesn't act as a resistance key level, price is going to use it as support and then expand higher. And as you can see right here, after price came in there, this key level was not able to act as a resistance zone and price smashed through it. And look at how nicely price used it as support and then rallied higher. So this is my next drawn liquidity, this buy side liquidity right here, because a lot of traders that were selling Bitcoin from this key level after the ETF announcement, so many of them are going to have their stop losses resting above this high. So I wouldn't be surprised to see price rally above this key level, run all their stop losses, and then potentially we could see a move to the downside for retracement and then potential continuation to the upside. Because I still remain bullish on Bitcoin. My next overall drawn liquidity is this key level that I'm going to outline right now. So right here is my next drawn liquidity on Bitcoin being $60,000. So that's the next place I'll be anticipating to see Bitcoin gravitate into. So don't forget, we still have inefficiency resting right here. So that will be the next drawn liquidity. at 52,000. After this key level, if it doesn't act as a resistance zone, we're going to use it as support, and this would be the next key level to watch out for. So right here is going to be the next key level, and if it doesn't act as a resistance, then price is going to smash through it, use it as support, and then this will be our next key level to watch out for. So that's my analysis on Bitcoin and what I'm looking forward to see in the marketplace. If you do have any questions, feel free to drop it in the chat, and I'm going to be there to answer you. So we're going to look at Ethereum to see what Ethereum is doing as well. So for Ethereum, you can see without this inefficiency, and then we started seeing this range movement. So I expect to see more move to the upside on Ethereum. It's really been a very lethargic price action on Ethereum. It's giving signals that maybe it's not really ready to have the huge expansion and have a drop, but nobody knows. But as long as Bitcoin is going to keep trending to the upside, it means that it's basically going to carry every other crypto along with it to go to the upside. So for Ethereum, I wouldn't be surprised for it to go higher. I outlined this key level and I said it's either this key level is going to act as a resistance zone, or if price smashes through it, it's going to use it as support and then continue higher. Because if we look at the weekly, right here has always been the only key level on Ethereum that I'm looking to see if it's going to act as a resistance key level. But if for anything Ethereum should smash this key level, I would like to see it used as support and then potential all-time highs, because there's not really anything else that I'm seeing right here that can send Ethereum to the downside besides this key level. And if this key level fails to act as resistance to send it to the downside, then it means we're going to use it as support and then new all-time high. It's inevitable. So that is my analysis and what I'm looking forward to see on Ethereum. And if you have any questions, feel free to drop it in the chat. So I appreciate you all for tuning in, and in the next live stream I will talk to you soon. Have an amazing day, everyone. So, in this live stream, we're going to start by thank you, Coach Ver, for your confirmation. In this live stream, we're going to start by looking at what the dollar is doing so far. So, in the previous live stream, I talked about my analysis on the dollar and bullishness on the dollar gravitating to the upside towards this key level. And so far, you can see how nicely price has been going up. Even though I was expecting price to come into this position before an expansion, but if you go to the 1 hour time frame, you can see that we mitigated this inefficiency and then we had an expansion to the upside. If we go to the 4 hour time frame, price is still pushing up to the upside, but we still have an inefficiency resting right here. So it's also something to look out for tomorrow. CPI numbers are going to be up tomorrow. So this could potentially be a reason for them to either drive price to the downside or to the upside. But potentially, I'm still anticipating for this buy side liquidity to get swept to swell, and also this key level as well. As you can see, the draw on liquidity and also my low hanging fruit resting right here. Price is eagerly pushing towards that key level. And most likely, I was anticipating for price to come here first before there. But if we get there, here first, it just means I'm going to be on the sidelines and I'm not going to be rushing into any trades on the euro or on the USD XXX pairs. Tomorrow, we're going to trade lightly tomorrow until after the CPI news. So after the CPI news, what I'm going to be anticipating to see in the marketplace will be for potential price spiking into this key level, because this has always been my extreme premium, and also the drawn liquidity being the inefficiency resting right here. So I wouldn't be surprised to see price draw into this key level come tomorrow with the CPI news. So this is what I'm going to be watching with the dollar. And if we check the percentage that is going to be for price to come into this key level, that's 0.7%. So let's look at euro as well and see what percentage that would mean for euro as well. So let's say for example, euro is doing a 0.7% move to the downside. Where would that leave us? That would leave us around this key level. So that would leave us around here. So I'm going to put a line across it. Now we're going to investigate to see what's actually there. So let's go down to the weekly time frame. So on the weekly time frame, we use our Fibonacci. Now, if using our Fibonacci, you can see that that key level also aligns with extreme discount in euro US dollar. So let's go to the 4-hour time frame to see if there's anything there that could be significant. And the only thing there that we can see that seems significant is this inefficiency resting right here. That's basically the only thing we can see right there at that position. So the only thing we're going to do now is to be patient and wait to see what's going to happen after the high impact news tomorrow. And if the high impact news should drop price into this key level, then we'll be looking forward to see if there's going to be a reaction, maybe a shift in market structure in the 15-minute time frame. Then if we do see any shift in market structure in the 15 minutes time frame, then we could potentially be looking forward to see if price is going to rally for euro and then a drop on dollar as well. So, but meanwhile, everything is a probability, and we're not going to just randomly jump into the market. We're going to be watching for reactions. We've already outlined our key levels and the things we're looking forward to see at these key levels. And if we see that, then we execute. But if we don't see those reactions when price comes into our point of interest, then it certainly means there's no trade for us and we're just going to sit on the sidelines. So that is what I'm watching on euro US dollar and also on the dollar as well. So right here, we still, you can see the trade that the trade that took us out today on gold. It delivered very nicely. It's down 1:6 risk to reward ratio, but our trade was supposed to be a 1:4 risk to reward ratio, but price just went straight to the stop and then straight to take profit. But it happens in trading. All we just need to do is to move along and look for other opportunities in the marketplace. But meanwhile, this one is now a trade that took us out and we took a loss on that one. So looking at GJ, I was anticipating for GJ to come in here before this expansion, but as you can see, GJ just rallied to the upside. So one of the major key reasons why GJ is so bullish is because of the interest rate. The pound is at 5.25% interest, and for the Japanese yen, it's still very, very low. Japanese yen is around negative 0.7, which is very low. So that is why any down move is presenting an opportunity for GJ to still continue rallying to the upside. That is why it's really a tough one to get entries unless you're just going to market as execute once price comes into an inefficiency. For example, right here, I was anticipating for this to come in here and to buy it, but it didn't give me any opportunity to buy it and then spike to the upside. But all we do is we wait tomorrow to see what's going to happen with the high impact news. So we're going to look briefly on GBP US dollar. So GBP US dollar, I marked out this inefficiency and I was looking forward to see price come in there, but price spiked up, but it didn't get to that key level and then we saw it drop down. So we just have to be on the sidelines because the news, high impact CPI news is tomorrow and it's really, really going to be volatile in the market. So stay safe, everyone. Just make sure if you're trading, use good risk management. We're not in the climate for over leveraging. Even though over leveraging is entirely bad, you shouldn't never over leverage. But in the climate right now, we are in the climate where you have to be very careful with every trade you're placing. So I appreciate you all for tuning in. And if you do have any questions, please drop it in the chat and I'm going to be there to answer you. And I'll talk to you all tomorrow. Have an amazing weekend. Have an amazing evening, everyone.